Al Fullerton, I think, from Aliom Financial. Al Fullerton joins us from the Sydney CBD studio. I believe you're there, Al. Hopefully you are. Yeah, you
Yes,
are. Hello. Good morning to you. Good. We've got the US markets as another talking point. Unfortunately, it's because of more weak data, particularly on the jobs front out of the United States. I guess we just didn't need another piece of data to fuel the concerns about that US economy. But where are we sitting after this week? How are you feeling about where that US economy is headed and whether there might need to be more done by either the central bank or even the government there?
No, that's right. It's certainly been another bearish night, making it 3 in a row there and really dragging down on the consumer sentiment over there. It's really been another negative lead based on this data coming out over there. Weekless jobless numbers being revised down, home foreclosures. We know what the data was there and doing nothing to actually help any consumer confidence over in the US. So now we have to look, what are the catalysts going forward? What is going to provide some confidence to the US economy, to the markets over there? And it's quite hard to see over the next coming weeks where that might come from. Perhaps it will come from the Fed, additional discussions in terms of the quantitative easing measures over there, but there aren't any real catalysts that I can see, and it's also a seasonally low volume time over there as well. So look, I think it's going to be a bit of an uncertain couple of weeks or perhaps a month ahead in the US, and I'm not sure how much that is really going to actually weigh on our markets.
We can expect it probably will in terms of the sentiment, I suppose.
That's right, yes.
Particularly with those volumes, it would seem.
No, that's right, and I suppose it'll see how we can actually balance out our reporting season compared to any weak leads we have from the US, and perhaps we'll continue to take some leads from this Chinese or from the Asian markets as well. And again, this week we've seen our sector hurt by this by the softening of Chinese demand.
Al, you mentioned the reporting season. It's in full flight. No top 100 as we heard reporting today. But you know, when you look across the week of the reporting season, it seems like it's been a bit of a mixed bag. Are there some key takeouts already for you here?
No, it certainly was a mixed bag, and it's quite nice to have today to take a breath and actually have a look at what we've had over the last 4 days. We have seen, as we spoke about, Brooke, before this reporting season, it's been a case of what guidance is, and companies that have a downgrade to guidance there, and there's a bit of risk going forward for their profit numbers for the next financial year, are really being thumped down. We've seen that with someone like Computershare. We've seen that with Telstra. It's all about the guidance. We know the last 12 months, and especially the last 6 months, have been extremely hard. We know that already, and so it's really about going forward and where they're going to derive value for their shareholders. And again, Computershare sold down heavily because their guidance was revised down.
And in terms of the CBA result, I guess that's one of the big takeaways in terms of looking for clues out of that banking sector. There does seem to be a view forming that maybe the recovery is a bit further off for those banks.
That's right, good profits, and as we've said, it's a very positive thing for our economy that our banks are actually posting these good numbers. So we must remember they're a bellwether in terms of how the Aussie economy is going, and so them actually having very robust figures coming out is excellent. Obviously, the forecast for the next 6 months is uncertain, and they're being cautious about that in terms of the funding pressures that'll come, in terms of margining, you know, the squeeze are going to happen there, and whether that's going to be passed on to the mortgage market. So in terms of the Aussie consumer, the retail sector, that's their biggest concern going forward.
But it's a concern for other sectors as well, though, that issue of the banks perhaps raising above and beyond the RBA, their borrowing rates, because even Stockland came out this week and Matthew Quinn said that's probably one of the risks for them if you do get those extra borrowing costs hiked by the banks. That puts a bit of a question mark over some aspects of their business. No,
it does. It certainly will trickle through the entire economy there. And as I said, the bank's been the bellwether for our entire economy on a more macro level. So yes, there are, but we must remember there are funding constraints that are going to happen. For banks to go and borrow offshore now, the stronger Aussie dollar has obviously meant that they have less access to funds over there. We certainly have issues in terms of their mortgage market. They're borrowing in the short term, but they have to lend out 25 years. So it is quite a complex structure over there. So whether or not the banks do increase rates further is something which we'll have to wait and see, and certainly who will be the first bank to go.
What is your view of Telstra shares trading on $2.90, where they have just come online, down another 1.4% after that 9+% fall yesterday? What do you say to clients about Telstra right now?
Look, certainly Telstra is a stock. It's got a very sticky register. Everyone holds it in their super fund. Telstra will continually chug along, but certainly they have forecasted going concerns and they have been punished for it. That again has been magnified by these negative leads from the US. So Telstra is hurting just like many of these stocks we have seen. Obviously Telstra below $3, if you're going to look for a long-term hold and you want to play that dividend yield play, certainly Telstra below $3 perhaps looks a bit more compelling. But again, it's the fact of these companies that have guidance downgrades are being punished in this market.
And so I imagine you're looking through the rest of the reporting season for that kind of theme. How are you playing this difficult and very choppy market though?
Look, I think there are a number of ways to look at this market. In terms of the reporting season, it's being reactive perhaps rather than being proactive. So actually not trying to crystal ball these reports, but waiting for the companies to report and then making the decision based on that. We have certainly seen some companies been heavily sold down and then bounce back up. It's been, buying or selling the rumour and buying the fact the next day. Computershare was a prime example. Another one was JB Hi-Fi. So that's one way there. The second way is certainly to actually keep some powder dry, look for opportunities in these markets, which there is a great deal of opportunity to look for. So really don't sit there, don't be overexposed to this market. And lastly, pick your time frame. How far are you looking at investing? If you're going to be trading this market, be ruthless in terms of taking profit and don't fall in love with stocks. Don't be greedy. If the stocks have fallen down and you have to take a loss, take the loss. And
can I ask you just finally, in terms of where you move through the next few months, we do have questions from your viewers come in, that sometimes you get that August-September period being a bit quiet. Again, yes. Yeah, you look for opportunities, but you're not saying put a whole lot of money to work in the next few months.
No, exactly right. I'm saying get your time frame right, and that's what you have to do. If you're looking for a long-term investment then, and you feel the company's value at this stage, then there are good plays out there at the moment. But certainly August and especially September historically have been months where the volumes have come off, where markets have historically fallen down and then bounced back up for a year-end rally. And it seems across the board a lot of analysts are looking and calling this. So I think that certainly we have to wait and see what our reporting season is going to bring. Remember, there will be surprises to the upside. The corporates, a lot of them are looking really good. So let's wait and see in terms of the surprises to the upside, and then you can make a decision in terms of going forward.
Thanks so much, Al. Great to hear from you. Nice to see you. Appreciate that. Have a great weekend.
Thanks, Brooke. You too.
That's Al Fullerton from Aliom, and just